All right, folks, my next guest says buy the dips here at home and abroad. I want to bring in Main Street Research and Chief Investment Officer James Demmert. And by the way, thank you for the hat. We're a little early here, but Dow 100,000. Let's talk about the primary drivers, right? Global markets. So funny, we had Stephen Austin this morning, earlier in the show, rather, and he's pumped. He just came from Japan. He's got a similar thesis as you.
Yeah, multiples are reasonable relative to this amazing earnings growth we have. And I look at it, we're 2 years into this new bull market. They usually last 7 to 9 years. So these numbers to us are reasonable. 7,100, 6-7% from here. That's, we think, with good earnings in the fourth quarter, it takes us there really easy.
Yeah, he's at 8,600 for 2027. And again, he feels pretty comfortable, particularly if you say, you know, how much of a gain that is. It's not a huge percentage gain. And so it's not unreasonable. But let's talk about what you say, navigating opposing forces, because there is some confusion out there, right? It just kind of touched on it a moment ago with Adam Kobasi in the sense that, you know, you've got things that look pretty good. You've got friendly central banks, not just the Fed, pumping money into these environments. So, okay, central banks, inflation, labor, how do we reconcile all of that?
Yeah, the Fed's accommodating, overseas they're accommodating, and the thing is GDP's at 3%. So are they cutting into an economy that's already a little too hot,
right,
which will bring back that inflation? I think if there's a reason we get a 7 to 8% pullback in the fourth quarter, which I would buy, it's probably this opposing forces of the Fed and a strong economy. And that labor market...
What do you think would be an inflation print that triggers that maybe?
I think it could be the inflation print. It could be labor market all of a sudden firms up a bit.
Right.
Possibly.
Right. All right. So let's talk about this, because on the Fed, you also say don't sort of base your investment strategy on the assumption of Fed cuts. In other words, that's a mistake.
I think it is. I think investors should look at earnings, look at companies whose multiple is reasonable relative to their growth, and stay in those sectors that are attractive, where they're really getting buyers.
Market risk. So we talked about a Fed policy error. What would be a DC policy error?
I think a DC policy error would be keeping the economy shut down too long, which is going to put some real pressure
2 weeks,
on
3
GDP.
weeks?
Yeah, I think 2-3 weeks. I think the market gets nervous about that.
See, when I see geopolitical unrest, it naturally sounds right, but we're a couple years into Russia's invasion of Ukraine. We've seen what's happening in Gaza. What can happen? We have to fire off a nuke at this point, I think. It feels like, for the market to pay any attention.
Yeah, I think it's a risk, but it's a smaller risk. I think in a way we might even get a peace dividend, which could take us to that 8,100 number.
Well, you know, President Trump's already solved 7 wars, right? A couple of them pretty old. Let's talk about attractive U.S. sectors and stocks. So in telecom, we've got the usual suspects. I don't think we need to go over that. Same thing, the technology, NVIDIA, Apple, Broadcom, Palantir. So this dip we're looking at, these are high beta names. The people watching, they shouldn't use a stop loss in it. If you're going to invest in these, you got to be invested and be able to ride out those kind of dips. Or would you have stops?
I think you got to ride out those normal dips and look at every stock. What's its normal dip? And then have a stop loss just beyond that, Charles. And that's what stops the catastrophic declines that investors often
Energy, GE, Vernova. This has been pulling back a little bit, but that's par for the course. Is okay?
Yeah, and I think it's an opportunity. That and Siemens Energy, same space, more electricity.
Robinhood has been on fire. I got to give Vlad credit. He's made this into a juggernaut of a company, and I think his business model is going to be, really copied by a lot of others. I really do.
I totally agree, and that client base is maturing. They want more products. They want more services.
So internationally, I'm glad you gave us some names, because when people say, I like international stocks, I'm like, okay, you've narrowed it down to 8,000 names. Let's go a little bit deeper. Industrials, financials, technologies, TT, Trend. I thought this was an American company, by the way. I didn't know.
A lot of people do.
Yeah. What's going to drive that?
Well, foreign markets are doing well, 27% versus 13% if you look at ex-U.S. And these are great names. They're a big part of the indexes. We think a lot of money is going to flow there. Train's a good example. They're helping cool down servers. That's what we need to preserve them, make them more efficient.
IBM, the Indian bank, India has the potential to be just a monster market. Everyone's been talking about this for years. I don't know if they've lived up to the hype yet, but you think eventually they will.
Yeah, a ton of IPOs and investment banking going on outside the U.S. They're the center of that.
And Lind Materials, again, is another name I thought was an American company. Exactly what do they do? Yeah,
they're not a chocolate company, which people think. It's a material company. We need those raw materials for these big booms we've got globally.
Taiwan Semi and ASML. Folks, ASML, it's a volatile stock. No one can touch them. I read somewhere it would take China 20 years to knock off what they already have. 20 years. So, I mean, that's a pretty good moat.
Only game in town for what they do, right? And if you were to build a chip, you need ASML. And the stock's really cheap relative to that whole Mag 7 area.
Great stuff, my man.
Good to see you.
Congratulations. You've been killing it. Appreciate you. All right.